Welcome back to another episode. Today we're going to do another semiconductor industry. Like you guys are familiar, this is my favorite sector to take a look at. And with earnings coming up, I want to take a quick look at some of the big players that are reporting in the next few days. So in today's episode, I want to take a quick look at what type of growth they are expected to see and just my overall thoughts on the industry. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment for 10 free stock ideas you guys can get right now. So the four companies we're going to take a quick look at are all that are going to either report this week or next week. So we're going to take a quick look at TSMC, Taiwan Semiconductor. They are reporting earnings on Thursday. We're also going to take a look at Lam Research, ASML. They both report on Wednesday of next week. And finally, we're going to take a quick look at Intel. They do report on Thursday of next week. So these four companies, we're going to see the overall growth and my overall thoughts. So let's just jump right into it, right? So first, I wanted to grab information how these companies did previous quarter and how they did a year ago to kind of see that type of growth. So here we can see I have the four companies: Intel, ASML, LRCX, and TSM. In no particular order, we can see Intel, I have quarter over quarter growth, and this is based on the average analyst estimates that are coming for this upcoming earning. And we can see quarter over quarter growth is non-existent for Intel, even though I am getting a little bit bullish on Intel. I just recently did a video. Make sure to check why I believe that's looking super strong. For something to keep an eye out, but we can see quarter over quarter growth for Intel is looking to be non-existing. Analysts actually expect a 7% decrease in quarter over quarter growth. Year over year growth, again, same thing. It pretty much looks flatline. It's expected to decrease about negative 0.5%. Compared to the same time last year. But we can see some of the other players. One of the biggest players out right now is going to be ASML. And ASML, if we take a look, they're expected to grow quarter over quarter by 35.57% and year over year by 37.7%. So ASML seems to be a strong, one of the ones that is being consecutively strong growth in both quarter over quarter and year over year. Then we have LRCX. And in a second, I'll explain a little bit of what these companies do and how they differ. I think there's four companies here, and they each hit a different sector in the semiconductor industry. So I'm going to explain that in a bit. But then we have LRCX. This is Lam Research, and this is Wednesday next week. We can see quarter over quarter, they are expecting growth of about 4.22%. So a small growth quarter over quarter. They are expecting year over year growth of about 35.98%. So very impressive year over year growth. Not that strong in quarter over quarter growth. We can see why ASML is getting a lot of love right now because of that yearly and quarter over quarter growth. The final company is TSM, and TSM is expecting to grow quarter over quarter about 11.8% and year over year of 16.72%. So strong growth coming out of TSM as well for quarter over quarter and year over year. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. So next, let's move on, and I just want to explain the difference between each of these companies. So first, I'm going to take a quick look at Lam Research and ASML. Lam right now is sitting at about $552 from the stock price. And Lam Research and ASML both hit the same type of market. They provide equipment for the manufacturers of semiconductors. So if you are going to be manufacturing a chip, you're going to come to either ASML or Lam. You're actually going to come to both because they both hit different parts in the manufacturing process. But you're going to come to ASML and Lam and be like, hey, I need your equipment to design chips, to manufacture chips. That customer would usually be Taiwan Semiconductor. So Taiwan Semiconductor is one of the companies that produces, that manufacture chips. So they're the ones that make the chips. And then you have Intel. Intels are the ones that design chips. They usually have their own manufacturing plant as well, but let's say Intel needs someone else to manufacture their chips, they would come to someone like Taiwan Semiconductor and be like, hey, I have this design, can you make these types of chips for me? And that's the story, right? That's pretty much the circle within the semiconductor industry, and we can see it perfectly amongst these four companies. And I also wanted to take a quick look at price actions for all of them. So we can see off their highs, the one that has taken the biggest hit right now is Intel. It's down about 23.4% from its high. The next is Taiwan Semiconductor. Taiwan is actually down 21.46% from its highs. So it's definitely seen quite a correction. And then we have Lam Research. Lam Research is down about 8.69. And finally, we have ASML, which is down 16.29. I do believe the reason most of these stock prices are down are investors were just getting a little too much excited about semiconductor shortage, about the overall excitement in the semiconductor industry. And there has to be some form of cool down. And that's what's happening right now. And it might be providing investors with some strong entry positions, especially in the dollar cost averaging method. I also wanted to take a quick look at price to sales ratio for all these companies. We can see the most expensive in price to sales ratio is ASML with the price to sales ratio of 12.25. But if we take a look at the charts of the upcoming growth, it makes perfect sense why ASML has the biggest price to sales ratio, the most expensive. This is the one that's consecutively growing quarter over quarter and year over year with strong numbers, right? 38% in both digits. Another thing about ASML is they recently reported some information to investors in their annual investors day that this is a company that's expected to have around 11% revenue growth rate for the next few years between 2020 to 2030. That's a huge growth rate in my opinion. Next, if we take a quick look at price to sales ratio, the cheapest is actually Intel. And again, if we take a look at the charts, it makes perfect sense. Intel is the one that's growing the least out of all of them. So it makes perfect sense for that to have the cheapest price to sales ratio. Again, like I mentioned, I did do an episode on Intel previously to this, so make sure to check it out. Why I see there might be some bullish signs for the company. Next, in price to sales ratio, the one's not second least expensive is Lam Research with the forward price to sales ratio of 4.2. I actually think that's sitting a bit low compared to this to Lam actually being one that's growing quarter over quarter and year over year. So it might be looking a bit cheap. Who knows? We'll look at prices in a bit. And then we have TSM sitting at about 8.56. Next, if we take a quick look at them individually, I think none of them are sitting super expensive or super cheap. The only one that's really sitting somewhat cheap in my opinion is Intel compared to historical valuations, but everything else is kind of sitting within their average levels. ASML might be a bit high compared to where it's normally been at in the past, but still not the highest. Another metric I wanted to take a quick look at was EV to EBITDA ratio. Very similar to price to sales ratio here. The most expensive is ASML here for obvious reasons. The cheapest is Intel, again for obvious reasons. And we can see Lam and Taiwan are kind of sitting next to each other. But I want to say I feel like Taiwan and Lam Research LRCX are not sitting too overvalued at the moment, which could be giving investors some form of buying opportunity. Finally, I want to take a quick look at technicals. Just wanted to make sure, hey, are these stocks that are a bit overextended? We can see ASML has seen nice pullback. The stock is sitting next to its medium-term moving average using my time frame. I believe these are times to do dollar cost average if one is bullish in the position. I don't have any of these in my portfolio, and I don't think I'm going to add within the next few weeks. Maybe in the longer time frame, some of them might make it in my portfolio. At the moment, they're not. But we can see right now, ASML has pulled back a nice amount. Management is doing a lot of buyback on this company, which I think is doing really well. LRCX, we can see, is another one that's pulled back, sitting at nice attractive levels, another dollar cost averaging. TSM, again, a nice level point, not overextended, dollar cost averaging. Same with Intel. I think a good portion of the risk has been eliminated for all these companies. Obviously, the stock price can continue to go down. Volatility can continue to happen. These companies' earnings are coming up and they might not meet expectations, which cause stock prices to drop. So there's never a guaranteed in the stock market, but in forms of risk to reward management, I do believe a good portion of the risk has been eliminated. for the long term of things. So I'm super excited within this market. Let me know if you guys enjoy it, and if you guys want to get this chart with upcoming earnings, I will be doing it with more stocks as earnings keep coming up, and I will post this chart on my Substack. You should find the link to my newsletter for free on the pinned comment. So take care, guys. Have a good night, and see you next time.